Hey guys, per usual, everything on this channel is for educational purposes only and it is not intended as financial advice. So not much has happened since last week. I'm pulling up Pike and Ashy here just to show that the trend is still fine based on this. Weekly, there's no dojis here. Anytime you see a doji, that's when you want to consider a reversal of trend. So the candle sizes, the bodies are still just as thick week over week. So that's a good sign for more up. So that's on the weekly. Daily, again, nothing new here. Still have the cup and handle. Still have the pitchfork, this quartile zone here. Target remains per usual what it was before. Still don't have any volume breakout. You can see based on this, I'm expecting a pullback. I'd call this a rising wedge based on volume. I didn't put it on the chart, but volume's also declining, so that follows suit with the rising wedge. And a dip down to this level wouldn't violate the cup and handle as a whole. So, maybe you can draw the cup and handle several different ways as far as testing support, and like the horizontal can be a horizontal instead of a diag. Whatever you want to do, it doesn't matter. The point is, I think it's there. Plenty of other people think it's there. It's probably there. So overall, I don't think the cup and handle's at any threat, even if it dips down to here. And you can see there's all sorts of support. What's not on here is there's a pivot here too. There's Kijun, there's Cloud. And if we go down this low, I don't think we will. There's even the 200 EMAs down here. So really, I'm expecting anything in this zone here. As far as a wick is concerned, that's where my bids are. I'm not in any position right now just because I'm waiting for the drop. Here was another idea with the pitchfork. Probably completely random, but from bubble to bubble, it was 227 days. We're currently in like day 180 of 227. So 227 puts us around February 1st. Doesn't really follow through with the January sell-off history of Bitcoin, but based on the pitchfork, trend is your friend, and you can't really argue with it, considering it's been in existence since January 2015. The other video I was talking about the 4-hour cloud. You can see how well the crosses have worked out as far as entry signals, barring this, which was the US election. Sort of, I think of that as like a punctuated equilibrium situation where news sort of trumps all technicals, especially in Forex, but sometimes also in Bitcoin. So that was what this was. But if we just look at the crosses, you can see you're in your long here, you're out of your long here, you're back in the long somewhere up here, out of the long here, you're in and out real quick here. Just this was the election again. And then you're in, you're out, you're in, and you'd still be in based on the 4-hour cross. I use fractals as well as TK crosses, Bill Williams fractals on TradingView with the indicator. So my exits are a little different based on that, just trying to preserve as much as I can from a profit perspective. I mentioned this in the last video, but I also would like to see a pullback. Again, why? Based on the rising wedge. So a pullback with a 4-hour TK cross recross, just like we had several times already, over and over again. That's where the money's at. If you want also the Kijun bounce again, is where the money's at. Every time we're in an uptrend, your bids there are always safe. Just look how many times. I mean, one, I'm going to count this as well, even though it's not good, but here, even on this last biggest dip, you would have got filled and you'd be up $12 on that trade. Something else to consider, I'm not going to show it, but there's a weekly bear div building on pretty much every exchange now because this is technically a higher high. Just barely on Stamp, but on most other exchanges. Another reversal sign is this, what's called a long-legged doji, which means that the buyers and sellers have sort of come to an equilibrium. I like to think of it as a spinning top type candle as well. Just another reversal sign to add to the confluence. Maybe it's just my bias because I'm not in a position, but overall, regardless of all the hate I get on Twitter, I don't think this is going to go to 920 from here. I think it's going to pull back first. Something else to pay attention to this week that I mentioned a few times on Twitter is the quarterly futures rollover. So this is BTC USD 3M on TradingView, the ticker. We're kind of in this decision week time sensitive area where a lot of current open contracts get closed or get rolled over into a different contract, and a new contract opens, I think on the not the 16th, but the week after that. So generally this is a time of high volatility, and here's that shown just another way. You can see this is AABTC on Twitter, his version of this. You can just see we're approaching that zone of instability volatility, something to watch for. And lastly, someone was asking why I'm moving down time frames on when I'm in an open position. Generally, I want sort of signals the quickest I can get them without being noisy. So if I know what the 4-hour looks like, and it's like, you know, it's going to take X many 15-minute candles to get a complete 4-hour candle, I'm always looking for cloud to sort of hug the price. That way I can get cleaner TK crosses. Now it doesn't always work out where lower time frames are better, but the other reason I use lower time frames and a different exchange for if I'm trading on one broker which uses Bitstamp, I need to look at futures on a lower time frame because the lower time frame on Stamp, like a 5 or 15 minute, is just zero volume, sideways, basically very poor signals in general. So that's one reason to switch if you have to. It's not the best thing, but you can, and it is effective because the markets are generally connected. So that's all I have for this week. Like, dislike, share, subscribe. Hit me up on Twitter and Telegram. Happy trading.